Hello, this is Shahzad Rabbani. Again, we are going to have a trade setup, a view of New Zealand dollar versus Canadian dollar. Remember, the trade setup would be applied on a daily chart, and this is for a trading session starts from the 30th of January 2017. I mean today, from onward. It is a swing trading setup, and the expected results would become in about a month. This is our expectation. Before going into chart, let's have a risk disclosure warning statement from my side. This video is only for educational purposes, and FX trading carrying marginal trading and substantial risk, so it is not suitable for every investors. Let's have on a chart. This is the chart of New Zealand dollar versus Canadian dollar, and it is a daily chart. As you can see in this chart, there was a buying trend that has persisted from April 2016. This is the lowest point up till the November of 2016. We may observe in this period of time the market were having a pattern of higher highs and higher lows, and the candles were from downward to upward, so we may call it is an uptrend. Remember, an uptrend has a common series more than 90%, a higher high and a higher low. Remember, once when you enter in any sort of trade setup, you need to have a swing trading views. So this trading view may be applicable for about a month if you want an adequate result from this trade setup, right? So this may be a swing trading. So for swing trading, we need to have at least 1.5 week trading views. Back to our original points, from April 2016 to November 2016, there was a buying trend persists, but this buying trend has a series of higher high and higher low. How, in order to just evaluate, I'm just putting for your convenience, this is the lowest point. After this lowest point, market has this high. After this high, it has posted this low. So this is the lowest point, this is the high point, this is the higher low. Again, this is the higher high. This higher high is above from this high, so we may call it a higher high. After this higher high, we assume the market would post higher low, right? But that higher low wouldn't be breached to the previous swing low, which is persist altogether over here, right? So we have higher low. So this is all together higher high and higher low, higher high, higher low, higher high, higher low. This is the higher low, again higher high. So from this to this, there were a buying trend and a series of higher high and higher low. If I were on this scenario, my preference were to be buying of this market on a lower point, obviously, and execute or sell on a higher point. This is the common desire of any trader, right? What happened on this is the higher high and this is the higher low, right? I have said that I want to put my drawing tool and I'm going to use only trend line only when I found anything in between higher high and higher low in a buying market, and anything between lower high and lower low in a sell market. If I found anything in between, then I would apply the trend line tool. Okay, as this particular point, which is the highest point, has shown a price rejection candle, you may call it anything like doji or shooting stars or hammer, but for me it is a price rejection candle because from this candle the prices were gone down. Where was the previous swing low after this point? This has posted the swing low, higher low, right? After this higher low, the market has posted this higher high, lower high. This lower high didn't breach of this high. Therefore, I need to draw my trend line tool, which connects at least the three major swings low, right? So I connect this major trend higher low, this higher low, and this higher low. Now as I am seeing a sell order on a daily chart, my sell would be if this trend line has broken. As on this particular point the trend line has broken, the above trend line has broken, therefore I place my sell order over there at 0.95833, right? Remember, I again said that this trading setup may be applicable for about a month. So once when you enter in this trade, then you only have to have a certain following rules which you said, which I have just said, that in a sell market there would be a pattern of lower high and lower low. As this point has broken, I placed sell order. My stop loss would be the major swing high, right? In this case the major swing high were there, right? This particular point. So my stop loss would be on there. So now the question is how much I would reward. As far as reward is concerned, my reward would be at least the double which I'm risking, right? In this case I have taken a risk of about 40 pips. So my reward would be at least 80 pips, right? So where my TP would be, it is around on okay, gentlemen, it is round about on this point. This is the first scenario of exiting. Okay, let's say my stop TP would be around there. This is the first scenario of my exiting, whereas the second scenario would be, I'm just deleting this point so that one can easily read and understand the chart on a naked view. Supposingly I am entering on this trade at this point for sell. My stop loss would be over there, and my reward, the first scenario was about 2 to 1 risk reward ratio, right? That persists around on here. The second scenario is I would be in this trade as long as the sell trend persists. After posting this high, I'm now assuming to have a low point, a lower low point. That low point must be breached over there onto this point. So after posting after breaching of that level, if it would have occurred, then the market would have a new high that would be called the lower high. My stop loss would be there, right? So this was my trade with regard to New Zealand and Canadian dollar. If you have any question or query, please don't hesitate to write to me. If you like this video, please share it and like it and subscribe it. Thank you very much. Have a nice weekend.